Hi everyone, my name is Andrew Rudinger, and on behalf of my co-authors, I will be presenting our work on assessing the viability of carbon dioxide utilization. To begin, it is important to discuss why we would actually like to utilize carbon dioxide. Currently, our annual emissions are greater than 36 gigatons of CO2, and this is putting us dangerously close to going over the limit set by the Paris Agreement in 2016, which would limit our temperature increase to only 1.5 degrees Celsius over warming. A lot of this increase in CO2 has to do with our increase in energy demand, which, as you can see, has been growing since the 70s and is projected to increase through 2040. Even when you consider the energy mix, and note that renewable energy is the fastest growing energy source, we can still see that the non-renewable energy uses is expected to climb from current levels through 2040, which suggests that we need some other mechanism in order to reduce our atmospheric CO2. Carbon capture, utilization, and storage is one promising method for reducing this atmospheric CO2. Simply put, CO2 would be recovered and then either stored in some other form of carbon or utilized as a feedstock for some other usable product. In fact, the International Energy Agency actually expects that as much as 20% of our emissions could be captured by 2050. In 2019, there were 19 CCUS plants in operation, resulting in over 38 megatons of CO2 avoided that year. However, when you look at the IEA's roadmap for meeting 50% of emissions in 2050 compared to 2005 levels, you can see that our current trajectory is putting us well short of this target. Much of this has to do with the cost barrier associated with CO2 capture, which is quite high. In addition, when you only consider storage, there are additional costs associated with the storage, and throw in the fact that there is no value-added product, so that without subsidies, it would be difficult to facilitate continued investment. Fortunately, for carbon utilization, you can actually offset some of this capture cost through revenue generated from the products. One particularly promising pathway is the synthesis of chemicals or fuels through microalgae pathways, which could utilize up to 4.8 gigatons of CO2 per year in 2050. And this brings us to our interest for the study, which is to evaluate the economic viability of CCUS technology for producing bioproducts under different technology and market scenarios. So before diving into the technology side, I want to first give some perspective on the current policy and market landscape. One mechanism to advance CCUS technology is through investment in research, development, and demonstration, or simply RD&D. For example, to meet the IEA's Blue Map scenario, an average annual investment of at least $3.5 billion between 2010 and 2020 was required. However, as we can see from this graph here, we are falling far short of that, with CCUS only receiving $1.45 billion in investment in 2018. When you look at the breakdown by country, you can see that the US is one of the largest contributors. However, overall, it's still not enough. When you compare this to the fossil fuels, you can see has a investment of $1.85 billion in 2018 and is much higher. And again, if you look at the country breakdown, you can see that the US is a large contributor for this as well. However, it is possible that some of this fossil fuel investment is focused on retooling current processes for clean technology, such as the use of bitumen for carbon fiber frames for electric vehicles. Furthermore, annual investment in fossil fuel RD&D has actually declined by an average of 3.5% annually since 2010 and is now within 25% of the investment total for CCUS, which is showing the public shift to clean technology. Now, what about the commercial scale? We're looking at this at the research scale, but we want to know what mechanisms are in place to help guide this energy transition. Putting a price on carbon is the most popular method for bringing the value of CO2 in line with the cost for CCUS and also providing an economic incentive for private investment. As of June 2019, 57 global carbon pricing schemes were in place, which is shown in this map here. The darker the red shows the higher the carbon price. In total, 46 countries were covered either through national or subnational schemes. In the US, there was 3 currently in effect in California, Massachusetts, and the Regional Greenhouse Gas Initiative in the Northeast. Overall, the global carbon price is fairly wide-ranging, from less than $1 per ton in Poland to as high as $121 per ton in Sweden. Some of the other notable carbon prices are highlighted here. This effective carbon price can have a huge effect on the viability of CCUS technology and will be an important factor in our analysis. With keeping all else equal, we can ask what is the minimum carbon price required to make our CCUS technology profitable. Now, I would like to turn your attention to the technological side of our research challenge. Like other studies, rather than start from scratch, we build our foundation on relevant literature, but we also have the unique ability to use current technological baselines from our collaborators across the US. Our study is based on a very nice study by Phil DeLuna et al. It was published in Science in 2019. And they posed the question, what would it take for renewably powered electrosynthesis to displace petrochemical processes? Here they outline a process similar to the figure on this slide, where biochemicals are produced through a pathway of electrocatalysis and biocatalysis. In particular, they provide technological targets for profitable processes, as well as identify different pathways through C1 carbon intermediates, and then they also highlight the important role of the carbon pricing on profitability. However, we want to dig a little more deeper into the details of these processes now. So we look at two studies that provide very detailed techno-economic analyses of these processes. Jowney et al. Provide a very informative analysis of the electrocatalysis side of the process, showing products that could be profitable, whereas Levet et al. Looked at the bioconversion side with an incredibly thorough process and equipment design that we could leverage and adapt to our process. Putting this all together, our work then aims to leverage these studies to develop a fully integrated, renewably powered CCUS process and then identify scientific and market parameters that could help make this process profitable. With the stage set, we can now outline our 4 objectives for our techno-economic analysis. First, we'll develop a rigorous material and energy balance using Aspen+. Then using this, we'll develop an economic model informed by current feedstock prices, literature, empirical models, and industry consultation. Putting this all together, we can estimate net present values for different scenarios and identify profitable ones. And then finally evaluate the sensitivity of these net present values to key operating and market conditions. In terms of our process itself, it can be divided into 5 sub-processes as identified here. CO2 electrocatalysis is where our carbon dioxide is converted into C1 carbon intermediates. CO2 recovery is for capturing and then recirculating carbon dioxide. Electrolyte recovery is for capturing our electrolyte and recycling it as well. Bioconversion is where our microbes metabolize our C1 carbon intermediates into biomass and our bioproduct. And then finally, product extraction and purification is where bioproduct is purified and separated for sale. We've also included a 6th additional process, hydrothermal liquefaction, which can upgrade the waste biomass to biofuel. However, this was not explicitly included in our study, but we may consider this in the future. Having mentioned scenarios already, I want to go over some of the scenarios that we're talking about before showing our results. I also want to show some of the assumptions that we made. And although that I won't discuss all of them, I will highlight that our production capacity is at a commercial scale of 100,000 tons per year of bioproduct. In terms of the scenarios themselves, we're looking at adjusting 2 parameters. One is the technological maturity, where we evaluate one scenario at the current technology based on literature and our collaborators' technological baselines, and then a high efficiency scenario for some time in the future. We also looked at ratios between 2 different carbon substrates. This one C1 carbon substrate favors bioconversion, while the other favors electrocatalysis. We have 3 scenarios here called the low carbon, medium carbon, and high carbon scenario, which will become more apparent why we call it this in the following slides. Before we discuss net present values, one interesting way to visualize the flow of carbon through the process is with a Sankey diagram such as this. Please note the legend on the bottom, which shows which nodes correspond to which subprocess. The gray coloring denotes CO2, while the green coloring denotes our desired intermediates or products. To compare these, you would compare the width of each section as the overall flow of carbon in that particular section. Comparing the current technology with the efficient scenario for the medium carbon scenario, qualitatively we can see a huge effect on the carbon flow between the electrocatalysis and bioconversion section, and the bioconversion section, and the bioproduct purification section. This is because the poor efficiencies at these 2 nodes for the current technology scenario and the high efficiency for the high efficiency scenario, of course. This, of course, is also reflected in the carbon conversion efficiencies for these subprocesses, which you can see in the key process parameters. And then this also results in a large difference in overall carbon conversion efficiency, being 2.5% for the current technology scenario and 31.7% for the high efficiency scenario. The product to feed ratio and the product to loss ratio just highlight this gap even further. However, none of this is unexpected, and what is more interesting for us is to look at the difference in efficiencies between the different carbon scenarios. Here, assuming a high efficiency scenario, we compare the low carbon scenario, which favors bioconversion, with the high carbon scenario, which favors electrocatalysis. Right away, it is easy to see why we name these low carbon and high carbon, based on this relative size of this gray CO2 recycling section. For the low carbon is quite small, and for the high carbon scenario is quite large. This is because a lot of carbon dioxide is being produced at the high carbon scenario in the bioconversion stage because it is so inefficient. Whereas when you look at the electrocatalysis for that, much of the carbon is converted directly into your C1 intermediate. This is the opposite for the low carbon scenario, where you have a lot of liquid recirculation because the electrocatalysis is not efficient. But for the bioconversion, a lot of it is transferred directly to the bioproduct section. This, of course, is reflected now in the trade-off in the carbon conversion efficiencies for these processes. However, what is most interesting is the overall carbon conversion efficiency, which for the low carbon scenario is over twice as large as for the high carbon scenario, which would suggest then that this is the far superior technology. However, at the end of the day, what we're most interested in is knowing what is the most economical. In that case, that would be what is the most superior. Returning briefly to the current technology scenario, it is easy to see why we're still far away from commercialization when you look at how negative these net present values are. This is mainly due to the poor efficiencies in the process. Also, though, it is interesting to look back on our discussion on investment, and it makes sense why our current technology is so far from commercializable when our funding gap is so far from where it should be. Another interesting thing to note is that the high carbon scenario is much more profitable despite having a lower carbon conversion efficiency. One major reason for this is because the Faraday efficiency, which is how efficiently electrons are directed to the desired product, is much better for the high carbon substrate. Moving on now to the high efficiency scenarios, we can see improved net present values, although they are still operating at a loss. However, they are positive or closer to the break-even point where we can start to analyze these and get an idea of why this is happening. So let's break this down into sub-process and see if we can identify that trade-off that we were talking about. Well, right away it's pretty clear. For the low carbon scenario, the electrocatalysis creates a huge negative net present value, whereas the bioconversion is actually profitable. Compare that with the high carbon scenario, and you can see that the electrocatalysis here is much better, but the bioconversion is what is dragging down that net present value. However, this doesn't explain why we are still operating at a loss for each scenario. So let's look at these expenses in even finer detail. Let's look at the capital costs and operating costs for all 5 sub-processes. So when we do this, now we get to the root of the issue. The electrocatalysis is a huge expense. However, the operating cost for the liquid separation is dragging the net present value in every single case. So with this pinpointed problem, let's look at the scenario where we assume that the liquid separation technology is improved to a level where the costs are negligible. And when we do that, we can finally see scenarios where there is a potential for profitable scenarios. So now we want to ask the question, what can we do to make this technology have a positive net present value? To do this, we identified 8 parameters that played a big role in determining the final net present value. This data shown here is for the medium carbon efficient scenario without liquid separation. And presented in this figure here is the net present value range for each parameter if it were adjusted to the value on either side of the bar graph. The baseline parameter values are given in the table here and are indicated in the figure by this vertical red line here. We also calculate the break-even point where the net present value goes from positive to negative. This is indicated in the table as well and is also denoted in the figure by this dashed black line. We find that the 2 most important parameters are actually market parameters. For electricity price, costs below 2.5 cents a kilowatt hour are actually profitable for our scenario, and that is a cost that has been achieved by photovoltaics before. For carbon prices, we predict a price of $144 per ton of CO2, which is currently higher than any global carbon pricing scheme and highlighting the need for more aggressive carbon prices. Technological advancement also plays a significant role in profitability. Things like Faraday efficiency, current density, and catalyst lifetimes can all be improved to drive down those extra costs. Unfortunately, each of these technological targets have been met in some capacity. The challenge then for us is to bring them all together into a process like ours. So with our results in hand, we can now make recommendations and highlight some next steps on the way to seeing commercially profitable CCUS like our technology. On the technological side, we need more selective, longer lasting, and cheaper catalysts, but this is already a very big area of research. Improved current density for electrocatalysis has the largest impact on profitability and be a great area for R&D investment. Increased metabolic resistance to higher concentrations in different substrates can help balance that performance trade-off that we were talking about. and efficient recovery of the product at the liquid separation phase is critical for having profitable scenarios. In terms of the policy recommendations, closing that funding gap between the current levels in the IEA Blue Map scenario will help stimulate technological advancement to improve economics, and more aggressive carbon prices are required in the short term to make up the technological gap between petrochemical processes and CCUS processes like this. And then finally, in terms of next steps to finish up this project, we're going to continue to consult with industry and our collaborators to better optimize the different equipment and processes in this overall process. We also want to evaluate different liquid separation techniques to really reduce that cost, and then look at different downstream revenue streams, such as hydrothermal liquefaction, which converts biomass into biofuel. So with that, I want to thank everyone who has listened to my discussion on the techno-economic analysis of an integrated electrocatalysis and bioconversion CCUS process. I would also like to thank all those that have supported and worked on this project who are listed here, as well as the funding sources for this project. Thank you again for listening.